Hi, Gabriel Josiah here. Today, we'll be looking at our discourse on financial statement analysis, which is the same chapter 2. So we'll be looking at Unit 7. We looked at Unit 6 in the last class. So today, we'll look at Unit 7. Let's introduce the unit, which is ratio analysis. Okay, like is our custom, I will share my screen so you can see the slides and connect with the graphics. Okay, so financial statement analysis is our discourse on Unit 7, and this unit is specific on ratio analysis. Ratio analysis. So what is ratio analysis? It refers to a mathematical relationship or relation between two variables. So these two variables are interrelated in the sense that you have a numerator and a denominator that connects them to help explain the term very properly. So it establishes a relationship between two items expressive in quantitative terms. So the quantitative terms states that we have a numerator and a denominator, and it could be from any of the financial statements. It could be from the statement of comprehensive income or from the statement of financial position. So that's a simple definition of ratio analysis. It's quite simple, and you understand it graphically when we look at an example. So accounting ratios can be defined as a significant relationship between figures shown in the statement of financial position and income statement. So ratio analysis are the interrelationship between these two ratios that connect. And accounting ratios are the significant relationship that matches the SFP and your SCI. So take note of that. It's very important. Alan Melville, sorry, I pronounced the name not quite too well. Alan Melville, all right, in IFRS, one of the IFRS publications, page 3554, described accounting ratios as a measure for the relationship which exists between two figures shown in a set of financial statements. So you see the definition of Alan, it's very clear here that two figures are relating together from the income statement and the balance sheet, as is traditionally called. So that's simply what accounting ratios are, and the ratio analysis is expressed in this clear term. So financial ratios assist us or assist accountants in making analysis and interpretation of financial statement. This is very important. So we use financial ratios to express as a percentage or as numbers to help us to interpret financial statement. They graphically help us do that in clear terms. So some analysts understand percentages more and figures than just data provided in financial statements. So ratio analysis or financial analysis help us to interpret this result based on percentages, based on common size analysis, based on trend analysis, which is very good and helps accountants analyze statements of financial publications very expressly. So in comparing and evaluating the performance of a business, accounting ratios are good tools that eliminate the problem of comparability using absolute figures. So when we have a numerator and a denominator and juxtapose them together to have a percentage, they help eliminate absolute figures like revenue figures that are standalone figures on financial statements. So with the comparison of these two, when we perform ratio analysis, they help us with good analytics and good decision making from such calculations. Accounting ratios are also used as a means of comparing an entity's performance for two or more periods, as a means of also comparing the entity's performance in the same industry. Of course, we'll have an average for an industry, for example, in FMCG, the fast-moving consumer goods, you have companies in that business space. So in that business space, your company could be benchmarked with this company. companies in that industry. So accounting ratios help us do that seamlessly. They compare entities' performance over periods and also benchmark them against the industry average. So this ratio analysis help us to be able to perform calculations, and at the end of the day, use these calculations to call management's attention to the issues bordering on the company. This is very essential. By way of introduction, we just made this short, as we'll be going into detailed analysis of other components of the units, which is on the financial statement analysis, speaking to ratios specifically. Thank you very much for this class and for listening. Let me know what you think about the ratio analysis we spoke about in the comment section. Ask questions, your observations, and don't forget to like, share, and consider subscribing so that you could get notified when we upload new lectures, new videos for your studies. Thank you very much, and bye for now.